I've noticed this trend when it comes to funding assessments. Let me just stop you right there. So on the 31st of August, I uploaded a video that was about to go live for the 1st of September, just like we do every Friday. Now, I was met with the news that happened with my Forex funds. So I pivoted, I done a live stream, and I covered all of the questions that were getting sent in. I had a video going out tonight that was already pre-recorded before all of this, that already addressed this. Is the prop firm industry coming to an end? All kinds of questions. So I covered that, I went in depth. And if you haven't checked out that episode, go and find out. You're going to get insights into the back end of our fund and how we structure things and protect our students. I'm still going to release this video that I was going to release last week because it's relevant. It was relevant before the news that I wasn't aware of, and it's going to help you out. This is what happens when you have the correct experience that I have in the game for 15 years, because you can't control everything, but what you can do is mitigate risk and put things in place to put yourself in the best position. What I'm going to cover now is one of the most common questions that I've been asked lately. Mark, is trading firms just a bubble? Is prop firms just a bubble? Are they going to burst? How would I even be able to answer that? How would I know about these leading funding firms, whether they're going to go bust or not? What you've got to look at is the difference between what they do and what we do. We get questions all the time. Mark, can I trade on the in-house fund? Well, if you're a Falcon student, then yes, you've got access to that. But at the same time, even as a Falcon student, we don't just let someone who's a complete beginner come into the fund, because our stats are incredible and we aim to keep them that way. Statistically, if you look right now, you're 35 times more likely to pass and get a payout on our in-house fund versus other funds. Now, although that can't be directly comparable because you've got thousands and thousands of accounts and then you've got hundreds of accounts. However, it's happening for a reason. Otherwise, we'd probably have quite poor stats if that was the case. If we weren't doing things in the right way, then we wouldn't be in this position that we're at. We also have many traders that don't trade on our in-house fund that also have third-party funds that also do really well and have hit 200k, 400k, 500k, 750k, and they're scaling up alongside having accounts on our in-house fund as well. So do funding firms want you to fail? Well, it's within their interest for most people to fail. Do you get paid out? If the answer is yes, great. However, the way that we do things is that we don't make our money off of assessment fees because we're building a fund. If that was the case right now, we wouldn't have a fund. It would not exist because we have such great stats of people passing on our fund and getting to the next level and keeping their accounts. We have many traders that have kept their accounts over a year, which is usually unheard of. There's a reason why you see stats in this industry with things like, I got a record payout, and then the next month they don't keep their accounts. Why do you think that is? It's not because of just logical reasons. It's not because they hit an unfortunate sequence of losing trades and then they got unfunded. Usually it's emotional reasons and all kinds of other things. But what I want to address is this. If you're trading with our in-house fund, you have the safety that we're going to be around for the next 10, 15, 20 years and beyond, because we've got goals set that way and our actions are very clear with that. So you can take that to the bank, so to speak, that you know that you can put your future in our hands, understanding that, right, these guys, they've been here for 7 years pretty much. They've stuck by their word. Everything they said that we're going to do over the last 7 years, have they done it? Tick, 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 tick. So we've done that. So what is the probability that the things that we're doing right now with the virtual trading floor, in-house fund, scaling up, and all the other expansion plans, the property fund, teaching people how to actually get their money to make money, what's the probability, if you was looking from the outside in, even if you didn't like the way that we traded for whatever reason, what's the probability that we're going to do what we said we're going to do? It's probably quite high, because we always have done. So you can imagine a trader on our in-house fund, do you think they're more comfortable with 500k with us or 500k on an external fund? I think you can understand the answer already. They know they can speak to us direct. They know that if the unfortunate sequence of losses happened and they took really great trades, but they just went through drawdown and they unfortunately lost their account, they know that we can reinstate their account. Not always to the exact amount. They're not a number on a spreadsheet, right? It's much more bespoke. It's much more tailored that way because we have an invested interest in them doing well. Like I said, if we made money off of assessment fees, our fund wouldn't exist. So there's a reason why we're in the position that we're in, because we believe in our traders. and we're building something completely different. They want to make money from assessments, but they pay you out, go, right, you've been trading 2 months, you shouldn't be going for an assessment right now, you're not ready. They're just going to take your money, the same way a casino takes your money. It's not their responsibility, it's your responsibility to go, right, am I in a position and should I be going for these assessments right now? Or should I get my education on point? Should I invest into my mindset first, like in something like Rewired, and build a robust mindset to actually be able to trade calmly under pressure, longer term at scale? What's more important? You make that decision. That's not their responsibility. So I understand, and I do think it's a great stepping stone. I'm seeing a lot of this trend in advice right now, which is get an assessment, stack it, pass that, get your payout, get your withdrawal, use that, just keep buying more assessments. And although that sounds logical, and some parts I agree with it, the part that I disagree with is the lack of experience of not understanding that you do need a personal account as well. It's actually within your interest to have that. So what I would do is this. So let's say, hypothetical example, you bank 20K withdrawal. You've got that 20K, you're just gonna either treat yourself to some of it, and a lot of people will maybe use too much of that, going on holidays, upgrading their lifestyle, getting a new car, maybe a bit too quickly. I also see that. It would be much more advantageous for you to stick to some ratios. So you could literally go off of the back of 20K, I'm gonna take 20% of that, I'm going to put that into a personal account. That way, you know that over a couple of years, it might take you a couple of years, you're stacking that away, and then you could build that up to a 6-figure account. So let's say, for example, you had 7 figures under management, and unfortunately, all of those accounts went bust. You either lost them, or it was a bubble, and these funding firms went. Then what would you do? You've upgraded your lifestyle, you've now got more car payments, you're now paying more for your mortgage or your rent, you're now accustomed to a higher increased level of luxury lifestyle, and you're used to that. You're not going to want to go back, are you? So what's that going to do? It's going to depress you. You're in a situation where I had 7 figures, now I have nothing. And you've not prioritized building a personal account, then what are you going to do? You're now scrambling around for these other avenues to access capital, either through some sort of different way. Now, I know I'm talking from an extreme point of view, but you have to be switched on and smart and shrewd about your long-term career. So wouldn't it be more important for you to at least know that, right, if that happened, I've got a 6-figure personal account that I'm trading, that I can slowly incrementally scale that up, that could be high 6 figures one day, right? But you're slowly scaling up, that you know you've got that there. I would say that's more important than you just trying to stack another assessment, because the other problem I have with this, most people trying to stack more assessments shouldn't be doing it in the first place. And as quickly as they get it, as quickly as they will lose it. And if you've been in that position before, which statistically you likely have, then this is your wake-up call. Create a plan. You can go, right, it doesn't have to be 20%, it could go 10%. You could just put that aside going, right, this ratio I put into my personal account, this percentage I treat myself. I do believe in rewarding yourself. I'm not under this mindset that I think you should just compound your way to the top and never treat yourself. I'm not suggesting that at all. I just think people are over prioritizing getting too many assessments when really they're not ready, and then they lose it, versus working on themselves. You got to ask yourself, how much of that withdrawal that you've taken have you invested back into yourself? And that could be in your mindset, it could be in business coaching, it could be in your setup, you know, equipment, whatever you need, right, to perform at the highest level. How much of that have you actually got a model where you can go 10% here, 10% into my bank, 10% into some assets, so you're stacking assets as well, so that in 5 years' time, not only have you built up a great personal account, you've got these assets and you can start small, and they could be crypto, they could be precious metals, it could be whatever you decide that you want to invest into, some stocks as well. But you're doing that knowing that you're not just building all of these big accounts, because remember, the market sniffs out desperation, because I've seen many people that have scaled up, they've made some money and they're still depressed. They still don't know where they're going because they lack direction. What this is going to do for you is going to give you direction and clarity, because you know this money comes out, I save this, I invest this, I put this aside, I'm building my personal account, and all the power to you. Still scale up your funded accounts. I'm not saying don't do that. Just don't just prioritize one thing and think that's going to fix all your problems. There's a reason why we're doing what we're doing, and we're going to continue to move to that. Our goal is to tick off, I would say a very major achievement, but that's just a check-in point, is 100 million on the fund. Now we're moving towards that aggressively. We're doing incredibly well. By the end of the year, I know we'll hit some serious numbers. We've got Dubai at the end of the year as well for the funded traders. And then by the end of 2024, I would be shocked if we don't hit 100 million. I'll be absolutely shocked. And that would just be a check-in point, and then we'll go from there. The great thing with us is that you got that trust, you got that security, knowing that if the worst happened, you know we're going to look after you, because we have plans to be here for years and years to come. We're building something that no one in this space is doing. As simple as that. I challenge you to find anyone in this space that is building an infrastructure like us. Please, I'll wait. I will wait for you to find it. It doesn't exist. And it's not because we compare ourselves to others. It's not about that. I'm just telling you, this is what we're doing. If that resonates with you and you want to build a long-term career, of course we would love to have you. Links in the description. We're more than happy for you to join us. But you have to come in with the mentality that you're looking to build long-term wealth here, not flip accounts.